The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So today we will continue what we started yesterday, which is, of course, asking our guests which stock they would buy if the market continues to melt down, and at what price. So today we have Philip Pepe from Shaw and Partners. Philip, what would you be buying today?
Look, I've chosen a company I cover called Acrow, ACF. The US is too hard at the moment. Is this a bargaining tool? Is he legit? What's going to happen with trade wars? Don't get in the middle. Is my thoughts. You predicting US earnings at the moment is quite difficult, so don't bother, at least in the short term. Focus on Australia. Focus on expenditure that has nothing at all to do with what's happening with global trade. That puts you to infrastructure, domestic infrastructure, particularly government-funded infrastructure. There's hundreds of billions of dollars to be spent in the next few years on hospitals, roads, train stations, Olympic stadiums. This is going to be spent regardless of what happens between the Chinese and the US economies and the Europe and the others. So safety first. Now, Acrow, a company I cover, I've got a buy rating on it. It's exposed to over $185 billion worth of infrastructure projects across the country, different government agencies, different sectors. It has a potential revenue pool somewhere between $2 and $9 billion over the next 7 years. Infrastructure will get built. One I call out is the Olympic Games, $7 billion to be spent on new stadiums and supporting infrastructure. That will be spent before the Olympics begin. There is no negotiation, that will be spent. So Acrow provides services to that segment, support structures, formwork, etc. It's trading on, it offers almost a 6% fully franked dividend yield. It's on just under 9 times PE. Comparable companies are on about 13 times. Good growth over the next 2 years. It's been thrown out with the bathwater. Yes, it has volatile earnings. Construction projects can be delayed, but delayed does not mean cancelled. I'd like to say zero, almost zero exposure to what's happening with the Trump trade tariffs. You never say never. Relatively safe place to put some money in. $1 per share, I think, definitely worth a look.
$1 per share.
It's trading at $1 per share.
Great. All right. Perfect. Thank you, Philip. Now, Rudi Filapek van Dijk, FNArena. Same question to you.
I can sense the sentiment for Acrow. In my view, the one good thing they've done, they've shortened their name.
And I've just sent a message to the team. We should probably do so on our graphics as well.
I wasn't directly addressing it, but yes, indirectly I did. I think, in a general term, if you're not a trader, but if you're an investor, what this situation does is it forces you to look at two things: risk and quality, and those two things come to the fore. I'm a little bit more of a risk-averse person, in particular when volatility hits this far, and I'm yet unconvinced that this is the end of the process, so to speak. History shows us this can go on for months. I mean, in 2022 it lasted for about 9 months. In 2018 it was 4 months, and they were absolutely savage. And I'm not even going to mention 2007, 2009. That was more than a year. So one of the problems we have now is this is probably not the bottom. It's probably not the end of the process, so what comes next? There's a few scenarios, and those are scenarios that as investor we have to take into account. Let's assume this process goes on for months on end, and we get these up and down whiplash days, and we essentially go nowhere in the end. Under such a scenario, it's very, very beneficial to have solid dividend stocks in your portfolio. And that's sort of like the similar sentiment as with Acrow. The one that stands out, I think, locally, more so than, for example, the banks or maybe even the insurance companies, is Telstra.
Okay.
I mean, growth in dividends, very solid. They actually have pricing power if inflation picks up. So that's a very, and it pays out those growing dividends when the share market probably might not do anything. Another scenario is, and that's, for example, there are people out there who are convinced that we will see a recession in the US now. Mm-hmm. That's going to not necessarily translate into a recession locally, but it will create a complete different environment for equities. meaning that probably all valuations will fall under that scenario. Now, Telstra would still be a good call in that scenario, but I would push forward Woolworths. Woolworths today is falling because we're on a risk-on day. When we go into a risk-off situation, you want to have Woolworths in your portfolio. It's not expensive, it pays dividends, and we all going to remain shopping at the supermarkets. In a different scenario, where this is going to be resolved over time, not too long, we're not going to have a recession, and we're not going to have too much troubles with inflation and with bond yields. By all means, the technology stocks, the quality technology stocks we have, they look absolute great value when they sell off. My favorite, of course, is TechnologyOne. No exposure directly to the US, and a retention rate in customers of 99 point something %. But hasty to say, they can still face some trouble if derating is still on the agenda, so it's not a given. And by all means, some of the other growth stocks, the quality ones we have, definitely throw them in. I specifically go for the large caps, and that's maybe a little bit of a difference between me and Philip, because this process can go on for a long while, and small caps carry higher risk than large caps.
Well, 3 for the price of 1. Thank
There
you,
you go.
Rudy. Okay, those are 4 stocks that
Sounds
my
like a hedge
guests
to me.
between them will be buying in this market meltdown.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.